What is going on out there, peeps? So this is going to be a different stock watch video. The reason is I want to benchmark my portfolio against the best in our country and see how I do, okay? Because even though I tell you guys, oh, and we look at this and stuff like that, I'm curious to see how I perform against the big dogs, all right? Now, my portfolio isn't very big, but let's see how we're doing. So I'm going to be benchmarking my portfolio against the best mutual funds here in the United States. And then I'm going to be gearing my profile, all right? So you're going to see what I'm talking about here in just a second. Everybody, we have Pimpy's Investment Chat. It's the same name as the YouTube channel. In here, we do talk about gold, silver, foreign currency investments, as well as cryptocurrencies and other things. Okay, so now I'm going to show you what I'm talking about, you guys, because I think this will be fun to see how I perform against the top dogs. So these are the best U.S. equity mutual funds as of July 2020. And as you can see, look at this one performance so far is the highest. It's at 26%, 26.4%. The second one is 25.3%, all right? So you can see they're in order from the highest to the lowest. So this performance for this company, and they're the top so far, the American Century Focus Dynamics Growth Investor Class. They're at 26.4. Of course, they have a lot more stocks in their portfolio, but let's match up against them. And this is year to date. Now, my portfolio is a little bit different because my portfolio has 4 months worth of data in there, and that's not bad at all. Look at this. That's smashing them in just a 4-month period. So I'm going to benchmark it now. Mine, I got 85% in my first quarter of me watching this particular portfolio. So I'm at 85%. They're at 26.4, but that's year to date. So we're going to make some changes, all right? So you see this thing banking over there? I'm going to be banking. That means I'm cashing out. I'm done. We're going to turn these ones in right now. And the reason is I want to replace them. And I'm going to explain to you why I'm banking these particular ones in. So the MGM Resort, the Wynn Resort, the Las Vegas Sands, and the Malco Resorts, these are all Vegas stocks. And once I thought we were coming out of the coronavirus, that they would be at full capacity, and I thought they would really rebound. But right now, they're only at 50% capacity, and I think it's going to affect the stock at least for the next quarter. So I'm going to go ahead and bank them. I'm going to sell them. Sell them as they are as of today's value. Okay, so I have a feeling they're going to draw this coronavirus thing out all the way to the end of the year. So I'm not expecting major changes with these ones. So I'm banking them in. Now the Perth and iShares Silver, well, they pretty much just follow the gold and silver market. So we already do that. But so I'm gonna go ahead and bank those as well. But here's something about the Perth Mint I should have thought about, and that is this. A lot of you guys are buying very large amounts of gold and silver, and you're afraid to have it physically in your possession. So maybe you might think about buying shares of Perth Mint. The reason for that, a lot of people don't know this, but whenever you're ready, you can actually trade your certificates in, your share certificates in to the Perth Mint. And by law, they have to exchange it for gold. Yeah, gold at the value of your shares. So if the gold goes up, so do their shares. You see what I'm saying? So that might be a safer way for you people who have very, very large amounts. It's just a suggestion. Okay. So we're banking our shares is what we're going to do. So for those 6 companies, we originally invested $10,000 into each one of them. So that cost us $60,000. The current holding is $73,332.43, giving us a profit of $13,332.43 before taxes and fees. That's a 22% return. 22, not bad, because 22 puts me at least, right here. 1, 2, 3, 4, 5, 6, 7. At least would have been in 8th place. Not too bad, just on those 6 stocks. All right. So let's see how we do. We're going to go ahead and bank them. So they're gone. And here's our new portfolio. So now instead of this saying as of April 21st, this is just our original investments. Original investments is what this is. This was the original value of our investments. So again, 10,000 into these particular companies. and this was the original value at the time of our investment. So these will continue. That's because we're not changing anything. We still want to monitor the position since April 21st, and we will, but we've now added ones, and it's not fair to say, hey, since April 21st, I'm benchmarking. So what I'm doing is I'm gearing my portfolio is what I'm doing. I'm changing it, and I'm going to explain why. That's why you see over here there's no difference. That's because right now I'm using the current values. See this? So the value should be the same. Okay? So nothing there, nothing here. And look, people were asking me from Canada, can you add some Canadian stocks on there? So I found a couple I think you guys might be interested in that I want to share with you, okay? So first of all, let's talk about Velocity shares 3 times long silver, 3 times long gear. The reason why I got rid of the Perth one, as well as the iShare silvers, this one's actually better. What this means is, see where it says 3 times long? What this means is whenever there's a change in price for gold and silver, you get 300% times that amount. So obviously if I'm telling everybody, hey, look, you guys, I have a lot of faith that gold and silver are really going to shoot up. What this does is gives you 300% times that increase. So heck yeah, we definitely want to be into these particular shares, okay? So as the market increases in shares, and gold and silver increase in value, so do these, okay? So we want to keep an eye on that. So this is the original cost right now. Here's where we are. This is the number of shares that we've gotten for this, okay? So we definitely want 3 times long silver, 3 times long gold. It's 300% of the market change is what it is, okay? Now, here, I'm going to go down to my Canadian ones. Here we are, gearing the portfolio. So Canada, here's a couple, and since I'm staying with the theme of gold and silver for the most part, Gold Mining Inc. is on the TSX Stock Exchange. You're not going to find it on American Stock Exchange. This is for my Canadian people. Yippers, okay? So Gold Mining Inc., they own gold mines, plus they also own other precious metal mines. So that's one that I want to keep an eye on. Again, this is on the TSX because look at your ticker is gold. But if you accidentally put it on the American one, it is for Barrick's gold, okay? So make sure you pay attention that you're on the TSX. So that is your ticker. Right now it's at $2.32, but it's actually been flying up the markets. It was like 50 cents literally like a couple of weeks ago. So that's something I think we should keep an eye on, and it should be one hell of a performance. That one should really fly up. I want us to keep an eye on this. So we hold 43,010 shares. There we go. That's where we are in this. Callinix Mines, on the other hand, what they do is they own mines as well, but they also invest money to other mines. They invest in other mines. So, you know, it's a really good investment over there in Canada, especially if we keep talking about gold and silver going up. And right now the share is at $2.35. I'm anticipating these two to, again, I'm banking on, if I'm telling everybody, look, gold and silver is the future, then we're looking into gold and silver mining stocks, gold and silver precious metal stocks, okay? Now here's the other 3 that I've replaced. Not replaced, but brought in. Long Care China, Biopharma, Long Care Cancer, Immunotherapy. If Trump keeps talking about therapy, treatments, this is why I think this would be a good one. And also these are dealing with how to deal with the coronavirus. I have a feeling between now, because what I'm going to be watching, we're going to be the next quarter, which is going to be from today all the way to the end of the year. I'm thinking these 3 right here are really going to perform good in my opinion, so I want to watch them. Okay, so these are the tickers for them. So Long Care China, Biopharm, and Long Care Immunotherapy, those 2 definitely. Now ARC Genomics, Revolution, that's they are into some real futuristic medicines, and if we're talking about the NESARA thing, then we definitely want to be invested in this company. I started to read a little bit about it, and I wanted to be into it more. Now read more into it. Now pay attention to this ticker, because there's actually 2. There's ARKJ or KGIV, and one that says -NV. The one we're going to watch is the IV one, okay? So this is now our new portfolio that we will be keeping an eye on, and let's see how it performs, okay? So I am benchmarking this portfolio banking out these 6 particular ones that stocks that we were watching, bringing in these newer ones in their place. So we have banked these stocks, sold them, gearing our portfolio, bringing in new ones is what we're doing. So this would definitely be the ones to watch. But man, this one right here, these 2 right here, Velocity shares 3 times long silver, 3 times long gold, I think would be one hell of an investment for people. This is just my opinion that I want to share with you, because if it's 300% of gold and silver performance, and I'm telling you, in my opinion, gold and silver is going to have a one hell of a run here in a short period of time. We're going to keep an eye on them. And again, over here, these are dealing mostly with what's going on with the coronavirus. And I think these 3 companies seem to be the top ones that we want to keep an eye on while we're dealing with the Rona, at least until the end of the year, to see how we do. All right, you guys, we are now, for Canada, you guys asked about them. These are the 2 that I picked, one in Toronto and one in Canada. This is dealing again with, minor stocks of what I'm talking about. All right, so this is our new portfolio. Let's just move this little bugger over. There it is. This will be the one we watch, and let's see how it performs. I have a feeling this one is going to perform really, really well. Okay, especially these 2 right here and these 2 right here. Or actually all of them, I believe, or I wouldn't have added them in there in the first place. All right, so not bad. This is our new portfolio to keep an eye on. Again, I'm benchmarking the old portfolio, not the old, but our recent one, against the pros. From April 21st through July 27th, we have an 85% return on our original investments. The top dogs was 26.4. Let's see how we do between now and the end of the year versus the top mutual funds. Keep in mind, those guys get paid huge multi-million-dollar bonuses to try to do what I'm trying to do is keep up with them and see how I perform against them, huh? Not bad, not too shabby. We're sharing this information with one another. Let's see how we do. At least it's fun. This is my Pimpy's fictitious portfolio. Okay. All right, you guys, that's it for now. Let me know what you think about these add-ons. And there you go, my Canadians. I picked 2 for you guys over there, but these 2 right here, I think are really going to perform very well. Again, all of them, I think, are when I added them in there. So it's going to be fun to watch. So I'm going to save it. This is the new portfolio that we will watch. We'll see how we do. So again, I have benchmarking against the top funds, and we do a little gearing of our portfolio, all right? All right, you guys, if you liked the video, hit the thumbs up button. If you haven't already, please subscribe, because when you do, it helps out the channel, and I surely do appreciate it. I'll catch you later.